This is Horizon's Middle East and Africa. Our top stories this morning. The US and China are ready to resume trade talks in London today, with the flow of rare earth minerals set to be a key focus. Clashes between law enforcement and demonstrators in Los Angeles over anti-deportation protests are escalating. President Trump's deployment of the National Guard inflames residents, with Governor Newsom requesting the White House pull the troops out. And Bloomberg learns Meta is in talks to invest in startup Scale AI. The financing may exceed $10 billion, making it one of the largest ever private company funding deals. Well, it's just gone 8 a.m. across the Emirates. It's 2 p.m. Monday afternoon here in Sydney. I'm Paul Allen in for Jemana Besetche. Let's take a look at how markets are tracking at the moment as we look ahead to the open of a new trading week in the US. We've got S&P futures looking a little bit flat right now, off about 1/5%. Similar story for NASDAQ futures as well, although as mentioned there, it's going to be interesting to watch how Meta and some of those other big tech names perform on the news of that Bloomberg scoop. Just to give you a little bit more detail, Meta is said to be making an investment of up to $10 billion in Scale AI. If you've not heard of Scale AI, you're probably not alone, but they do handle a lot of the data side of the AI story in terms of input, reading data, and the human army of contractors that labels data that helps tech firms such as Meta Platforms. So that investment could provide some tailwind for some of the tech stocks there. Watching the bond space as well, there's been a fairly muted day for US Treasuries. The US 10-year there, the yield just creeping down a touch, 4.4877. A lot of focus on the long end of the curve at the moment, though. We do have longer data yields retreating from 18-month highs, but we've got a critical 30-year auction in the US coming up on Thursday. That is shaping up as a key test of demand, and if things don't go as planned, we might see that starting to nudge 5% again. Oil also holding on to gains at the moment, 66.44 for a barrel of Brent. Pretty steady after that big surge we saw last week, and that was despite the production increase from OPEC+. We are, of course, though, on the demand side, seeing signs of progress on trade talks, so that might support the demand side of the picture. So oil holding on to those gains. Well, let's have a look at how our markets in Asia are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, Paul, we're seeing Asia stocks quite remarkably hovering near their highest since November 2021, and remarkable because there are still these lingering tariff uncertainties, and of course we are watching out for the US bond auction this week as well as the US CPI data. So you're seeing positive trend in the region, and just to highlight some of the sectors that have been doing well, it includes tech. We're seeing the AI, the chip plays that are being lifted, I think, by this feel-good factor coming from Meta that, as you mentioned, is said to be in talks for this multi-billion-dollar investment in an AI startup. Now, aside from that, it's also about investors really digesting the data out of China today, as we saw Chinese exports to the US plunging by the most since 2020, and this is despite the tariff truce. Not only that, when you look at the consumer and the producer prices, the deflationary pressures in China are very much intact, yet we're still seeing gains in Chinese stocks. Maybe this speaks to the expectations of stimulus from Chinese authorities, or maybe investors are just seeing this data as sort of the rear view mirror look at everything. They're more focused on the US jobs growth that looks quite strong, along with optimism coming ahead of the US-China trade talks. Paul.
Avril Hong there in Singapore, thank you. Let's get a little bit more on those trade negotiations. We have negotiators from the US and China set for those talks in London happening later on Monday, of course aimed at diffusing tensions over Beijing's rare earth export restrictions. The Trump administration wants to restore the flow of critical minerals, crucial for everything from cell phones and EVs to military systems.
Those exports of critical minerals have been getting released at a rate that is, higher than it was, but not as high as we believe we agreed to in Geneva. And President Trump, being a deal maker, talked with President Xi, and he said, let's take, our senior guys, the people who are the same level as you, let's have them meet somewhere, and let's get these things cleared up, and then we'll clear up what you don't like that we've agreed to release on our side.
All right, for more, let's get to Bloomberg's James Major. And James, Kevin Hassett there making it pretty clear what the US would like out of this, but certainly China would like something out of this as well. What's the quid pro quo? What does success look like?
I mean, I think the interesting thing is that export controls are now very much on the negotiating table. And during the Biden administration is very clear that export controls on semiconductors, on the machinery to make semiconductors, on all the other things that the US was restricting from exporting to China were not negotiable, and they were not part of any other trade talks about, tariffs or these kind of things. And now, these Chinese export controls that were put in place in April have basically forced the U.S. to change that negotiating stance. And it looks like there will be negotiations, not just on tariff levels, not just on extending or not extending those tariffs that both sides had imposed on the other, but also on what does China want as a quid pro quo for restarting and speeding up the flow of rare earth and rare earth magnets to the U.S. These Chinese export controls, I don't think are going to go away. They've never rescinded any of the export controls they put on critical minerals that once they've been introduced. They can go a bit faster. They could do more, approve more licenses, but it's logical to expect that they're going to want something from the U.S. Whether that is rescinding the statement the Commerce Department made on the Huawei Ascend chips, whether that is releasing more semiconductors and releasing more semiconductor technology to Chinese companies, whether it's like in the first Trump administration where ZTE was basically circling the drain and was about to go bankrupt because of the export controls the Trump administration had put on, only for Trump at the last minute himself to rescind those controls and allow the company to continue to exist and to continue to sell. So it'd be interesting to see what exactly the Chinese are demanding but where the US is willing to negotiate. But clearly China has found a pain point here that it can leverage to try and get what it's been trying to get for years now, which is a reduction in the export controls that the Commerce Department has put on Chinese companies.
Well, both sides accuse each other of reneging on agreements that were made in Geneva last month. Is there a risk that we could see a repeat of that? Although we do have Howard Lutnick present this time around. Does that mean anything?
I mean, I think Lutnick's presence there shows that what the Commerce Department does, which in this case is export controls, is on the table. I also expect, though, that we will see a repeat of the first trade war, 2018, 2019, and a repeat of the recent sort of, we have a deal, oh no, we don't have a deal, oh, we do have a deal, kind of, that kind of repetitive behavior is what happened last time. I was totally not surprised when it happened again this time. And so the two sides will meet, there will be a discussion, they will come away with an idea about what they've agreed. Maybe they will implement that and to the satisfaction of both parties. But even if both sides don't suddenly walk away from the deal thinking they got something different than what the other side thinks, even if they're actually in agreement and they do make clear what they've agreed to, which doesn't seem to happen in Geneva, there is still a lot of issues that need to be negotiated. Even leaving aside export controls, there is big questions about Chinese economy, about the pace and the level of Chinese exports, not just to the US, but to other countries. And so, these negotiations are going to continue on for quite a long time, even if the ones in London are more successful than Geneva.
All right, Bloomberg's James Major there. Well, protesters and police have clashed in Los Angeles on a third day of rallies against the Trump administration's sweeping deportation policies. The president and California Governor Gavin Newsom have been trading accusations about the response. Newsom calling on Trump to withdraw. National Guard troops have been deployed under federal command. For more on this, let's get to Bloomberg's national immigration reporter, Alicia Caldwell, who joins us from Los Angeles. So, Alicia, what's the latest when it comes to the situation on the ground?
As the days progressed, protests have become more and more violent. The sheriff this afternoon, Jim McDonald, said, effectively what's happening is protesters from the early part of the day are being replaced by agitators and folks committing vandalism and violence, frankly, throwing concrete at police and other objects. And things are getting more and more tense as the day goes on. As you said, this is day 3 of protests against the Trump administration's sweeping immigration enforcement operations here in Los Angeles. With National Guard troops arriving early this morning, tensions just continued to ramp up through the day. And there were several tussles between National Guard and protesters, and then law enforcement from LAPD as the day went on.
Yeah, so those National Guard troops, they're on federal authority with no request for help from the state. We're on uncertain ground here, right?
We are. It's, this has not really happened before in recent decades. It was the 1960s, the last time the federal government federalized National Guard troops and deployed them to a city without sort of coordinating with local authorities. And that was for the civil rights protest in defense of civil rights protesters. So what we're seeing now is fairly unprecedented. National Guard troops, not unusual in civil unrest moments or natural disasters. As recently as January, after the LA wildfires, the National Guard, this unit, in fact, deployed to help respond. So that part's not unusual. It's the federalizing of these troops and sending them without any request or even consultation with the governor and, obviously in this case, the city of Los Angeles.
All right, Bloomberg's national immigration reporter Alicia Colwell there. Still to come, hear why Callanish Capital's positive on US mega caps despite some investors' fears that the AI rally might have run its course. We'll have more on their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Well, Asian stocks have started the week with gains ahead of the US and China resuming trade negotiations. Friday's positive jobs data in the US also easing recession's fears. So joining us now for more on markets is Haig, Bathgate, CEO at Callanish Capital. Haig, thanks so much for joining us today. I want to start, if we can, in the US. I mean, you're positive on US mega caps at the moment with a couple of qualifications. But are there some risks to this considering the ongoing uncertainty around trade and, well, policy more generally in the US?
Yeah, I think so. I mean, look, it's very volatile at the moment, isn't it? And then particularly with Trump, changing his mind sometimes within the same day. So, we're trying to look through that noise, look at the entry point. And the reality is, the US is the leader of the AI movement. It has a dominance in chip design. It has a dominance on the key players extracting that technology. And obviously through the Trump trade talks as well, it's going to have an oligopoly globally in terms of who gets access to that AI technology as well. So we see it as a good sort of medium to long-term entry point at the moment.
Specifically to AI, though, you've got a nuanced position on that as well. I understand that you're short on AI cybersecurity for AI protection. Can you tell us a little bit more about that?
Yeah. So it's a long position on the cyber protection, but what we're looking at is second order effect now. So you have the key providers of of AI technology through the sort of Mag 7 ex Tesla, but now we're looking at how you protect that. How are you going to adjust for cyber security in an AI environment? And we're just seeing a sort of emergence of some of these sort of second order effects, I think, and we see the best way to play that through sort of mid and small cap US stocks. We see a sort of widening out of the rally as we start to see some of these trade talks get to a conclusion and hopefully a bit of volatility calming down a bit.
You're not a fan at the moment either of European defence stocks, which does seem somewhat contrarian. Can you unpack that for us a little bit?
Yeah, so I think, look, there's been a lot of hype in Europe, and obviously Europe and the UK in particular have been outperforming the US market year to date. A lot of that is on the back of muted defence spend talk. But the reality is we're seeing huge onshoring of resource requirements, particularly in sensitive areas like military spend. If you just take one example, like BAE Systems, 50% of its revenue comes from the US. We don't see that continuing longer term. And we also question whether we actually will ever see the muted defence spend that's been talked about in Europe. You've got Southern Europe, which is not behind this at all in the form of Italy and Spain, and the UK just doesn't have the budget to make some of these commitments that it was talking about recently.
Well, also in Europe, we've got an important event today with the US and China meeting for trade talks. had some promising early signs already. Are you anticipating any changes to the trade environment this week, and certainly any that you'd be willing to put money on?
Well, I think generally we're seeing a bit of a thawing of tone on trade talks relative to where we were at the start of the year. I mean, look, it's the usual sort of, kind of cage rattling that we've seen with Trump, and he's rowing back a bit in some of these talks. So I think we probably get to some sort of conclusion on that. And of course, what the markets hate more than anything is the uncertainty. So, I think we're going to see some progress, whether it's this week or whether it's in the coming weeks. And I think we continue to be quite constructive on that. I mean, of course, you never know what's going to happen. Trump can change his mind quite quickly. But generally, we're seeing a thawing of tone. We're seeing on both sides, actually, on China and the US, and we think that's quite constructive for markets moving forward.
Yeah, certainly the dispute not doing either economy any favours at the moment. We just had some data out of China showing it in deflation for a fourth month, exports contracting in May as well, which we could reasonably expect. Are you putting money to work in China right now?
Yeah, we've been quietly building positions in China. I mean, we've obviously seen quite a lot of stimulus, which is not really sort of feeding through to the real economy. But it's just quite interesting seeing the difference in Asia compared to the West. Obviously, what we're worried about in the West, in the US, and in the UK rather than wider Europe, is inflation remaining stubbornly high. China doesn't have that problem. Obviously, we're seeing inflation continuing to fall. We're seeing fierce competition in things like EV manufacturing, and that gives them a lot of latitude to provide further stimulus, which we think will come. And again, I think once we get to some kind of conclusion on these trade talks, China, on a valuation basis, looks pretty attractive, and the wider Asian region as well.
All right, Haig, Bathgate CEO at Callanish Capital, thank you so much for joining us with your views today. Still to come, the activists behind an aid ship heading to Gaza say Israeli forces have forcibly intercepted the vessel. We'll have the details of that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. The group behind a humanitarian aid ship heading for Gaza says the vessel has been intercepted by the Israeli military. The boat has reportedly been redirected to Israel, from where its crew will be sent home. The Freedom Flotilla coalition vessel was carrying activists, including Sweden's Greta Thunberg. Joining us now is Bloomberg's executive editor for the Middle East, Stuart Livingston-Wallace. So, Stuart, it's looking increasingly difficult to get aid into Gaza. What's the latest?
Yeah, I mean, I don't think that this ship was necessarily going to make a great deal of difference. It was more about drawing attention to the situation. I'm told that the amount of aid on board was pretty small. But as you rightly point out, I think it highlights the real challenges that the organisations that are trying to bring aid in have faced over the last several weeks. So you saw again, for the umpteenth time over the weekend, that they had to sort of suspend operations. Again, it's sort of at the moment constrained to a very small part of Gaza. I think the anticipation or the expectation and the hope is that that can spread out over the next several weeks, but I think there is a degree of skepticism there about whether that's going to be possible. And what's interesting is that in recent discussions about what a ceasefire might look like, there has been an apparent willingness from Israel to concede a return of aid distribution to UN or UN overseeing bodies. So it's something I think that we need to keep an eye on in the next several weeks, but absolutely for now, there's a real trickle going through.
Meanwhile, we've got a Palestinian militia emerging in Gaza, which, well, it's new, could pose a challenge to Hamas's rule.
Yeah, I mean, I think this is potentially quite significant. So that we have seen over the last several months, there have been sporadic protests across Gaza against Hamas. Now, they did seem to die out rather quickly. Nonetheless, this is an interesting development. So, I mean, it appears that this was sort of leaked, as it were, by a former defense minister in Israel. It was then sort of confirmed by Netanyahu the following day. And again, now we have sort of confirmation of sorts that there is this militia now operating. Not quite clear who exactly is funding it, who's arming it. But I mean, it must be said that you've had these clans across Gaza, you know, for decades. This is not a new development. What's interesting here is that it is perhaps, and I am being very cautious here, perhaps the beginning of cracks starting to show in Hamas's control over the entire strip. So again, it's something, you know, we'll watch over the next few weeks, the next several months, and see how that develops. But again, potentially there an opening for what the future of Gaza might look like in terms of who's actually running the show.
All right, Stuart Livingston Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Thank you. Well, Iran's state television says the country has obtained a large trove of sensitive Israeli nuclear information. The report says the mission to obtain the documents, images and videos was carried out a while ago. The claim comes amid renewed hostilities between Iran and Israel. Reports emerged last month that Israel was weighing potential strikes on Iranian nuclear sites. Let's take a look at US futures tracking ahead of the new trading week. A little bit soft at the moment. We've got S&P E-minis off by a little bit under 1/5%, so a shade of an improvement from when we last checked them. A similar story for NASDAQ futures as well. We will, of course, be watching tech stocks on the news of that Bloomberg scoop that Meta plans to make a substantial investment in Scale AI. This is a company that labels data that tech firms like Meta use. That investment could potentially exceed $10 billion. Taking a look at Dow Jones futures, thus softer as well, and ahead of the open in Europe, a little bit of weakness also. Just see on the bottom of your screen there, something to note, DBS's market value, the Singaporean bank, exceeding $100 billion for the first time. We've got an oil price as well, which is holding on after a weekly surge. This is despite that big production increase we saw from OPEC Plus again. But there are signs of progress on trade talks, and that is supporting the demand side of the picture. Gold reversing away from the record highs that we've seen, holding steady there just above $3,300 an ounce again on trade optimism. And we do, of course, have the US and China meeting in London. So yeah, oil steadying as those trade talks raising hopes for reduced global tension. We're going to have a little bit more on how the commodities markets are reacting coming up next. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. The US and China ready to resume trade talks in London today, with the flow of rare earth minerals set to be a key focus. Clashes between law enforcement and demonstrators in Los Angeles over anti-deportation protests escalate. President Trump's deployment of the National Guard inflames residents. California's governor says he will file a lawsuit to block the federal government's intervention. And Bloomberg learns Meta is in talks to invest in startup Scale AI. The financing may exceed $10 billion, and that would make it one of the largest ever private company funding deals. It's just gone 8:30 a.m. across the Emirates. It's 2:30 p.m. Monday afternoon here in Sydney. I'm Paul Allen in for Jemana Besetche. Let's take a look at how futures for the US are shaping up. That Meta deal could be interesting to watch in terms of how tech stocks respond. We do have NASDAQ futures a bit softer though at the moment, about 0.25%, but certainly equities markets in the US going to be looking for a fresh catalyst after we've seen them reach levels that we've not seen since February. Progress on trade talks, that could be something to watch out for, obviously, lifting risk sentiment, but the bond market could present somewhat of a bigger challenge. We've got a couple of key auctions coming up this week for the US, 10 and 30-year securities. We've got the 30-year once again closing in on that psychologically important 5% yield. So if the auction doesn't go well, that'll be one to watch. And a couple of other challenges for US Treasuries as well. We had a solid jobs report last week, but we get the inflation report this week. So the Fed, meanwhile, expected to remain patient, certainly not showing signs of having any appetite to ease sooner rather than later, but forecasts are looking for a modest pickup in core CPI in the US, so attention could shift to fiscal dynamics and the future of that big, beautiful bill working its way through the Senate at the moment. So a few risks around the bond market there. We'll talk about commodities in just a moment, but crude losing a little bit of ground, but broadly hanging on to those gains that we saw last week despite the production increase. Again, a bit of optimism around the trade picture could give a much needed boost to demand sentiment. Let's check in on how markets in Asia are faring. Meanwhile, Avril Hong's in our Singapore studio. Avril.
Yeah, Paul, we're seeing Asia stocks running higher to the highest level since November 2021, which is interesting given the lingering tariff uncertainties, these concerns about the US bond auctions this week, along with US CPI data, and then also how investors are kind of digesting all this data out of China, which shows whether you're looking at consumer or producer prices, that this is an economy very much stuck in deflationary risks, and that it's going to be quite difficult to break out of this in the absence of any monetary or further fiscal stimulus. Then you look at the trade data. Chinese exports to the US fell by the most since 2020 as well, but we are seeing that stocks across the region looking pretty positive today, and this is lifted by the healthcare but also the tech names. Tech is getting a bid amid these meta headlines that seem to suggest that we could see more investments in the space. So chips, AI stocks are doing well. The South Korean Kospi is outperforming. That optimism also, I think, fueling through the Asia markets thanks to the US jobs number and the optimism surrounding US-China trade talks. Paul.
All right, Avril Hong in Singapore, thank you. Well, a slump in Saudi stocks as well as some lackluster debuts and two pooled listings are threatening to take the sheen off a market that has been among the world's hottest in recent years. Saudi stocks ended May as the worst performers globally, pressured by falling oil prices and concerns about slower spending on mega projects. Joining us now is Laura Gardner-Cuesta, Bloomberg's Middle East equity capital markets reporter. So Laura, what's happening to sentiment in Saudi equity markets?
Thanks, Paul. Yes, I mean, as you mentioned, Saudi stocks have been among the weakest performers globally. And what we are seeing in the IPO markets is rare weak debuts. So traditionally, or at least in the past few months, IPOs have had like one of the strongest listings, and they tend to debut really strongly. But we saw a rare debut by United Carton a couple weeks ago, where the stock plummeted on debut, and there were concerns around valuation. Since then they've reported disappointing results, so that's hurt the stock even further. We've also seen two pulled listings in the parallel exchange and Nomu. This is also quite rare. We've seen a really busy April for Nomu listings, but the performance has been pretty mixed there as well. So last week we saw two pulled debuts there. And finally, we've seen Saudi hospital operator, which had the weakest level of demand that we've seen in recent Saudi listings after they revoked dividends that had previously not been disclosed in their IPO prospectus. So put together, I think this paints a picture of shifting sentiment and one of what you, like you said, one of the strongest, one of the busiest IPO markets in the world in recent years.
So how about the future? What does this mean for upcoming IPOs in the kingdom?
So everyone will be watching the listing of Flynas. This is the biggest Middle Eastern listing so far this year, $1.1 billion. And it's also the first Gulf listing in almost 20 years, so a very high-profile deal. They got really strong demand, around 100 times over subscription levels. But as we've seen, this doesn't necessarily translate into aftermarket performance. So we'll see how that goes. Everyone will be watching that. And we've also got a few listings that could come before the summer. One of them has already been announced as a gym operator, sports club, and a few others that still have regulatory approval. And in conversation with bankers, I keep hearing that the second half of the year is going to be extremely busy. But the key question, I think, especially for investors, will be valuations, because I don't think they are ready to entertain lofty valuations at this point. So it's a conversation that companies will have to have with their advisors and in the book building. So we'll see.
All right, Laura Gardner-Cuesta, Bloomberg's Middle East Equity Capital Markets reporter. Thank you. And for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Well, as I've been talking about, oil prices steadying after a weekly surge as a renewed round of US-China trade talks offers the potential for reduced global tensions. Oil inventories have risen sharply across the world in recent weeks, a sign of the pressure that higher output from OPEC Plus could place on the global crude market. Energy reporter Stephen Stepczynski joins us now with more. So what's the greater force of nature here for oil, Stephen? Is it improving demand sentiment or this absolute flood of supply from OPEC Plus?
You know, I think you have to look at both, right? It's a demand supply picture. And clearly, if there's a breakthrough with the United States and China, you have a much rosier picture. These are the two big consumers of oil in the world. And if they're going to have an economic hit because of a trade war, that is clearly not good for consumption going forward. Now, I do have to say, it's not a slam dunk. I mean, oil prices are still down about like 10 to 13% from the start of the year, due in part to this, but also OPEC Plus flooding the market. They've been increasing output at a faster rate than initially was signaled over the last few months, and that's adding this bearish sentiment. Now, that being said, Morgan Stanley this morning had a really good note that we wrote up that sort of indicated that while OPEC Plus is increasing their targets for production, they might not actually be hitting them. Or in other words, Saudi Arabia and other countries might not actually be producing much more meaningfully into the market. And that actually kind of helps to balance things. That could be part of the sentiment. When you look at the ship tracking data, maybe the traders are looking at that. If they're looking at the barrels of crude on the water, maybe they can already see an indication that these output increases, while they are signaled by OPEC Plus, aren't actually materializing to the degree that they were expecting. So that does kind of add to a bullish element that you could see in the market. And I guess we'll see how it plays out over the next few weeks and months. How are Asian inventories looking? How are actual exports from the countries looking? And if it indicates that OPEC Plus isn't actually flooding the market to the degree that folks were expecting, you could see some sort of upward movement in prices.
Yeah, there's some unusual dynamics at play in the copper space as well. On the one hand, we've got copper production in China hitting a record, but mine output starting to slump. What's the outlook for prices there?
Well, I mean, I think one interesting thing on copper is that refining capacity, right? There's been this huge boom in the United States, in China, to increase their refining capacity. China has really been quite resilient as well, while those refining margins have essentially turned negative in the short term and potentially negative for long-term contracts. That refining capacity remains there in China, and there's quite a large overhead. I think one thing that people are going to be looking at in the copper market specifically is exactly how much you see that capacity kind of pull back. You might see other nations or other companies, see Glencore, a major producer, potentially talking about months ago. They were saying resilient, but they might turn to reduce some of their output there. You might see other countries under pressure. But what's interesting is just how China has remained in this picture, in part to this giant build-out, but also that they're willing to kind of take a hit financially to continue their position, this enormous position they have in the refined copper market.
We've had a lot of focus on the gold price this year, which has been on an absolute tear. But now we see silver starting to catch up, closing that ratio. Silver's up about 10.5% now in the past month. Is that ratio starting to look a little bit more normal again?
I think that's one of the big questions we had. If you were talking to me about 4 months ago, you saw that massive surge. It looked like Bitcoin, right? It's just this giant surge in gold prices up to a record high just a few months back, or actually a little bit more than a month ago. And now it's kind of steadied. But one thing that I saw on social media, one thing that I saw people talking about, the retail investors especially, is where's silver in all of this, right? Usually, traditionally, the two move relatively close together, but it didn't, if you were investing in silver, you weren't seeing those massive gains. And we got the chart right next to me right here, and it already illustrates, you've seen prices go up for silver. They're near, a multi-year high, but still you're not seeing quite the gain that you saw in gold. I think part of that is just potentially branding, right? I mean, gold is the one that people kind of traditionally go to when you're looking at these large geopolitical destabilization, you're looking at trade wars, when you're looking at maybe a flight from the US dollar. Gold has consistently been that commodity that a lot of investors have gone into. It's a big part of where investors are diversifying their portfolios. But silver, clearly, over the last few weeks, you have seen catch up. Investors, maybe, according to analysts, you could see it go up some more. But all of this trade, I think there is this fear or this risk that if there is a breakthrough with trade, if there is a resurgence in the U.S. economy, and there is a flight back to the dollar, that could be a big factor. I think one thing people are going to look at is the Treasury auctions in the United States. We've got the 30-year coming up, and that's going to be one factor that people are going to be looking at very closely. How have Treasuries, how is that bearing and doing in this current economy, in this current situation, and that will sort of potentially dictate where gold and maybe even silver goes from here as well.
All right, Bloomberg, Stephen Stapczynski there in Singapore. Let's take a look now at some of the other stories that we're following. China says negotiations with the European Union on setting minimum prices for Chinese EVs have entered final stages. The bloc imposed steep tariffs on Chinese EV imports last year, alleging state subsidies give the country's vehicles an unfair advantage. China's Commerce Ministry says both parties have instructed their working groups to step up efforts to resolve differences. A US trade team has extended its stay in India, signalling progress ahead of a July deadline for a tariff agreement. Sources say the team will now remain until Tuesday to continue discussions, originally scheduled for just 2 days last week. Negotiators are working on a phased trade deal and were told most of the issues may be finalized within a week. Still to come, the US Labor Secretary expects the pace of job creation to continue. We're going to hear more from Lori Chavez de Rema next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. The US Labor Secretary expects the pace of job creation to continue after the economy added 139,000 new jobs in May. Lori Chavez de Rema also told Bloomberg the Trump administration is focused on protecting American workers first.
We are excited, 139,000 new jobs, and that President Trump, with his dedication and his leadership, really has beat expectations for the third month in a row. Our goal is to grow this economy and grow this workforce, and the president has done a wonderful job in accessing companies to invest in the workforce, and we're seeing it across the country. So while jobs are continuing to grow, and we might see a decrease at the federal level, which is another great thing, that we've seen 22,000 jobs leave the federal public workforce, and we're seeing it at the local level. So there's a lot to look forward to. There's a lot that we're excited about, and we couldn't be more excited for this economy in this third month in a row of a growing jobs report.
What do you think is behind, though, the drop in the size of the labor force?
Well, what we want is to grow that labor force. We're seeing increases in construction jobs. We're seeing increases in transportation and in healthcare. While the manufacturing sector is holding steady, what we're excited about is the focus that the president has on the skilled workforce. Again, my part of this equation is to grow that workforce. And as we transition through this process of onshoring, and the president has done a wonderful job in negotiating some of these tariff talks, tens of trillions of dollars are being invested. This workforce is going to continue to grow.
The unemployment rate remains steady. A lot of economists will point to the fact that potentially it's for the wrong reasons, not because jobs are plentiful, but because workers are dropping out.
Are you concerned that too many workers are dropping out, especially in some of these areas that are mostly filled with immigrants?
Well, certainly what we have seen in the last few months is that native-born Americans are the ones where the job growth is happening. That's exciting for the American people. We want to make sure that we're protecting the American worker first, and we want that labor participation rate to go up. I will tell you, unemployment is holding steady. That is a good thing for the American economy. We'll continue to focus on that as the president's executive order with 1 million apprentices across the nation, and also through an executive order that we're going to have the skilled workforce with AI. I'm telling you, and I'm confident that that workforce is going to continue to grow, and we're going to see these numbers continue to climb and unemployment rate continue to drop.
Do you foresee wage pressures potentially reemerging to fill jobs if there are fewer immigrants coming to the United States, which is a policy of this administration?
Well, I can tell you right now that, wage growth, hourly wage growth is up almost 4%. That's great for the American people, more money in their pockets. And with this one big, beautiful bill that the president is focused on, we are going to see no tax on tips, no tax on overtime. Do you know what that does for a family of 4 who possibly can put more money in their pocket? I can tell you this, one big, beautiful bill equals one big, beautiful workforce.
That's U.S. Labor Secretary Lori Chavez-DeRemer speaking with Bloomberg's Anne-Marie Hordern. Let's take a look at some other stories that we're following. Egyptian authorities are preparing to launch a $30 million revamp of the tourist experience around the pyramids of Giza. The 7-year project includes a network of buses, improved facilities and fine dining options, while promising to tame the site's notoriously aggressive hawkers. Egypt wants to double annual visitors to 30 million within a decade to make it one of the most visited countries in the world. Bloomberg has learned that Turkey will supply Somalia's navy with T-129 attack helicopters, and that's after the two nations signed a defence pact earlier this year. The helicopters will be used to fight the al-Qaeda-backed al-Shabaab group. Turkey signed a 10-year agreement in February to train and equip Somalia's defence forces, while also making deals on hydrocarbon exploration and production. Still to come, startup Scale AI set to receive a multi-billion-dollar investment from Meta. We'll have details on the deal potentially exceeding $10 billion up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. Meta is said to be in talks to make a multi-billion-dollar investment into artificial intelligence startup Scale AI. Bloomberg understands the financing could exceed $10 billion in value. Now let's bring in Bloomberg's Tom McKenzie in London for more. So, Tom, not exactly a household name. What does Scale AI do, and how significant is the investment?
Yeah, absolutely. Few people have heard outside of the world of technology and AI, of course, of this company, but it has grown in prominence. And now, of course, it's making headlines with this potential investment, $10 billion from Meta, as you say, one of the biggest private sector investments that we would have seen for years. So Scale AI, it focuses on one of the 3 key components that you need to build out large language models, which is data. So you have energy, chips and data. Those are the 3 main components that come together. And Scale AI is squarely focused on data. So they train up, or at least they build out quality data that these models then feed in to train on. And they hire PhDs and others to help work through that data and quantify it and tag it. So that's essentially the business model. They've also providing their own solutions into enterprise and have been pushing into defense as well. And I think what this deal tells us is a few things. One, Meta, of course, and Mark Zuckerberg is not going anywhere in terms of its investments around AI. They've pledged to invest at least $60 billion this year and $10 billion now for Scale AI, if this, of course, comes to pass. So Meta is full bore on the focus on AI, particularly as well around data. It's a reminder that data is becoming a key battleground, because along with energy and chips, getting hold of the data, quality data, is becoming increasingly difficult for these large language models. And so there is a fight on that spectrum as well. And then the third part of this, I think, in terms of what it tells us, is defense technology. Meta is increasingly working with the Pentagon, particularly for around things like virtual helmets and AI-infused helmets for the military. And Scale AI already has relationships with the Pentagon. So I think it's also a reminder that Meta is getting closer in terms of defense technology as well. So on all three levels, I think those are the significance in terms of the deals that came through. This company, Scale AI, was valued at $14 billion back in 2024. You can imagine that valuation is much higher now.
Yeah, and also we've got London Tech Week kicking off today. What's top of the agenda?
Well, I was talking about data and energy and chips. Well, chips will be front and centre because Jensen Huang of NVIDIA will be giving the keynote speech at London Tech Week later this morning alongside the Prime Minister Keir Starmer. NVIDIA also expected to announce, Jensen Huang, some investments here in the UK around training the workforce to be able to use these AI applications. They've pledged to train about 100,000 people up until about 2030, investing in their R&D space as well in Bristol here in the UK. So the focus is going to be on Jensen Huang has to say at that keynote speech and those investments, and how the UK is trying to position itself in this AI race versus the US, versus China, and also as well versus their counterparts across the channel in Paris, because France is also hosting Viva Tech, which is a big tech event, and Jensen Huang will be going there as well. And France has been able to build out an AI ecosystem with tax cuts. That is something that arguably the UK government will be looking for, which is desperate for growth. And AI is one solution for this UK government. They hope to drive growth levels higher in the UK.
All right, healthy competition. Bloomberg's Tom McKenzie there. And you can catch Tom's new tech show launching this Friday, bringing you all the latest news impacting this industry. Here's a look at how equity futures are tracking, but that is it for Horizons Middle East and Africa. I'm Paul Allen.